stock market has a lot of volatility surrounding the rate question on one side. Two is mixed reports from many companies coming out right now. Again, there's some companies that have been killing it. Three, I think you're dealing with a lot of, there was a big outlook as it relates to the economy, and now we're in a point where it's kind of humming along. Wall Street has been essentially wrong on every major prediction for the last 2 years. And you can start with the rate cuts. They were consistently wrong about that. They bet on 6 in 2024, and there was 1, right? Next is they bet that companies wouldn't be performing as well. Companies have been doing great, but now we talk about growth of the overall economy, etc. And I don't think it's in the places that move the stock market as much. I think we're going to be dealing with more of a manufacturing boom and a manufacturing increase and things looking like on that side of the equation. I see tech as having bigger issues over the long term. I don't mean one individual stock like an Nvidia or something. I'm talking about tech as a sector. If we have higher rates, tech usually benefits massively from low rates. So high rates, tech's a slower industry in those kinds of times. So I think the stock market is over concentrated right now. Since 1995, we lost nearly half of the number of companies in the stock market. So it's over concentrated. I think it doesn't have the type of cheap money that the stock market was booming on for the last 15 years. And I think in a higher rate environment, the stock market still has a lot to shake out. And now you're seeing even the biggest names like Goldman Sachs have the same idea that maybe stocks aren't the future for the next decade. And they're even betting that bonds and fixed income will massively outperform equities, which are stocks.